Hi everybody. In this video, we would be looking into the concept of marginal costing. What is marginal cost in economics? The marginal cost is the change in the production cost, which would come from producing an additional unit. Now we need to understand this very carefully. What we are saying is it is the change in the production cost, and that change comes from producing an additional unit. So there are two things: the production cost and producing at the cost of producing an additional unit. What is the production cost? We know that in production cost we need to consider two things. One is the fixed cost, and other is the variable cost. For example, if you are producing anything, that production would require some investment, and that investment is going to be there irrespective of whether you are producing the good or not. So that is called as a fixed cost, whereas the variable cost would change with respect to the output of that. It would change with respect to the quantity of goods which are produced, right? So the variable cost is going to increase when more units are being produced, right? But that is a production cost. We are not talking about simply production cost, we are talking about the marginal cost. So marginal cost means, suppose we are producing 100 units and we have figured out the production cost of that 100 units by considering the capital investment which has gone into that, and also considering the variable cost in the form of, let us say, salary of the people who are working in that unit and so on. But if you want to figure out that what additional cost the firm has to bear if it is going to produce 101 unit, right? So it is going to add one more unit. So that additional cost is called as the marginal cost, right? And how do you calculate that? So if you want to calculate the marginal cost, we need to divide the change in production cost by the change in the quantity. All right. So suppose there is a change in production cost from $100 to $110 when you are when you are producing a quantity, let us say from 50th to 51st, right? There is an increase in one. So that change, if you do that division, that would give you the marginal cost. Okay, so it's simple that way. It's a delta change in production cost per delta change in the quantity. Now, when you are talking about environmental economics, we are not simply talking about the marginal total cost. We are also interested in figuring out the cost which is borne by the society, and we had already discussed that this comes from negative externality. So, what is the marginal social cost? So, the marginal social cost would refer to the additional cost which is imposed on the society. And this would come from either the production of one unit or the production of one unit of service or some goods, or it could come from the consumption of one more unit of a good or one more unit of a service, right? So both goods and services are considered here as as products, right? So it includes the marginal social cost, include both the private costs, and it will also include the external costs of negative externalities, right? So let us consider an example as to how do you calculate the marginal social cost. Let us imagine that there is one factory, there is some firm which is producing some product, okay, widgets. So that some product, some X product it is producing. So the factory would, let us say, emit some pollution as a byproduct of its production, right? And then the private cost of the factory of producing that one more product, okay, includes, what would that include? It would include, let us say, the material cost, the energy cost, the labor cost, and so on, right? However, the production process would also generate, let us say, some pollution, and which might impact the surrounding community in terms of health, or some other form of environmental degradation, right? So that if you have to consider, right, then we need to uh, call it as an external cost. So how do you break up that marginal social cost? So the marginal social cost would include the marginal private cost, which is basically the additional cost of producing one more product, and it would include the addition in the expenses in the form of wages, in the form of raw material, and additional cost in the energy, right? So let us say that marginal private cost of producing one more widget is $10. And we said that because of this production process, some pollution related problem would be there. Maybe there's an increase in the cost of healthcare of the individuals which are staying around third party, or it could be the cost of cleaning up the environmental damages, or it could be the loss of biodiversity. So let us say that that comes as for producing one more widget, that one more product, that additional cost is $5. So then the marginal social cost is simply an addition of marginal private cost. In my case, it was $10, and the external cost which has to be borne, right? That becomes $5, and thus the total marginal social cost is marginal private cost plus external cost, which comes to $15. So this is how we calculate the marginal social cost.